Welcome to Forex Destiny Trading. In this lesson, I will be covering the topic of technical analysis and expanding on some of the information regarding technical analysis that's found in our full Udemy course. If you have not taken the full course, the Forex Destiny Trading Complete Training System is available on udemy.com. A link for this course can be found on our website at forexdestiny.com. My course provides a series of 7 full-length educational lessons that teach you how you can trade using our very own proven profitable trading system. After each lesson, you'll be quizzed on the information you've learned and be given homework assignments to help you build your knowledge of trading and show you just how to start applying the knowledge into your very own trading account. Once you've completed the 7 lessons and you've passed the final exam, you'll receive a certificate for your accomplishments, and you'll be well on your way to trading a winning system. For more information on the full course, use the links below or visit forexdestiny.com. Be sure to click the follow button and subscribe to our channel to receive updates on new and informative videos. You'll also want to interact and follow us on Facebook and Instagram, where we post strategies and trade ideas. Now let's get ready to discover your own destiny. In this lesson, we will discuss what technical analysis is and why you should be using it in your trading strategy. We'll discuss what are some of the most common technical tools that you can use. We'll go over how to utilize the RSI, how to utilize the MACID, and how to utilize the Fibonacci sequence. Then we'll get into utilizing moving averages, and lastly, I'll show you how to apply some of these technical tools to your trading. In this particular lesson, the goal is to help you in your understanding of how technical analysis can work in a trading strategy. I will discuss some common technical tools and provide some examples so you can see them on a trading chart. And finally, I will provide some examples of how these tools can help you in your trading strategy. So now that you know what we're going to be looking at, let's get started. So first, what is technical analysis in trading? Technical analysis is one method traders utilize when analyzing price action and attempting to recognize the future of a price direction. In order to perform technical analysis, traders utilize technical tools and indicators provided by their broker or their trading platform directly on the price chart of any particular asset or assets. The goal of technical analysis is to recognize where price may move into the future by analyzing price's past movements using technical tools. It's important for you to understand that past trends do not guarantee future price action, but they can provide significant confluences that may indicate future potential. Technical tools utilize numerous parameters to provide potentially significant patterns and trends in price that's based on factors such as past price average, volume, price trend, and even naturally occurring patterns in historical prices. When used in conjunction with one another, these technical analysis tools can potentially provide market traders with greater confidence when making future price predictions of a trade. Now that you know what technical analysis is and what you are looking for while utilizing technical tools, the question then becomes, which technical tools should you be using? First off, you need to know that there is no one technical tool that will provide all the confluence you need in order to have 100% ability of predicting price direction. One of the problems is not in the tools, but in us as trade analyzers. We interpret the information that's provided by the technical tool, and that interpretation are not mutually exclusive. So how do we work around this problem? We utilize more than one tool of analysis. By using several analysis techniques, they can potentially provide us a greater confluence that our trade prediction has the greater probability of being correct or not. Although technical analysis is not the only method of analysis that you should be using in your trading strategy, it is absolutely an important part of your trading arsenal. By combining the information provided by the different technical tools, they can possibly provide you a greater insight towards determining the probability of potential price direction. The following technical tools are the most utilized tools by traders, followed by an explanation of the information that they provide. First, we'll cover the Relative Strength Index, also known as the RSI, then the Exponential Moving Average, also known as the EMA, the Fibonacci Sequence, also known as the Fib, and the Moving Average Convergence Divergence, also known as the MACD, MACD. The Relative Strength Index, also known as the RSI, is a technical tool that indicates when a trend is either oversold or overbought. When used with other confluences, it can provide additional confidence to your trade analysis. A trend may be considered oversold when the RSI is below 30 and overbought when the RSI is above 70. These numbers are typically preset into the platform indicator. It is not uncommon for price to continue to extend well beyond the point where the RSI first indicates that the market is being oversold or overbought. It is for this reason that a trading strategy utilizing the RSI works best when supplemented with an additional fundamental and technical indicator to form a complete and tradable confluence. While there are other types of moving averages, such as the simple moving average, I personally use the exponential moving average, or the EMA. The EMA is different than the others because it gives more weighting or importance to the recent price data. For example, if we apply the 20-day EMA to our trading chart, the line is calculated by providing the average price of the previous 20-day closings. So at any time you're looking at the 20-day EMA, you are at any point in time on the chart seeing what the average price was over the 20 days prior. But since the EMA is weighted, it is giving you the average price at the close of the day, which is therefore the most current average price of that asset. So why is this important? Because we're attempting to predict price movements into the future based on past data. So to be more accurate to price prediction, we want the most current information possible, and the EMA gives us just that. While not written in stone, many traders like to attribute these specific colors to their EMA lines. By sticking to consistent colors for each timeline, you'll find it easier to recognize that information that those lines are providing across multiple time frames. You'll know that white means 200, blue means 50, and so on, instantly, without reminders or having to go into settings repeatedly. Do your forms like this if it works best for you. 600-day EMA in brown, 200 EMA in white, 100 EMA in red, 50 EMA in blue, 20 EMA in yellow, and the 13 EMA in purple. Do that across all charts, all time frames, and you'll remember this for a long time and you'll never have to go figure it out. Now that we know that the EMA tells us about the average price over a select number of days, what information do we learn from them? First, we learn by the looking of these moving averages how price is reacting when they approach the candles of price. Does price simply pass through them unaffected, or is there a reaction? Since the information is in the past, we can see if there is any historical pattern to how price has reacted to those same average prices. Another thing we learn from the EMA is how price reacts when the different averages cross one another. What is the significance of the average price over 100 days passing through the price average of a 50-day or a 200-day? Does it affect the price action, and why? If the average price over 100 days is $25 and the average price over 50 days is $27, this tells you that price is rising in the shorter term. What are the rules of supply and demand? As price rises, demand falls. As price falls, demand rises. As demand rises, price rises, and as demand falls, price declines. This is a subject that we discuss more thoroughly in the full course, but this should give you a good insight into the significance of these EMA lines. The Fibonacci sequence is another set of technical tools. The Fibonacci numbers is also known as God's fingerprint. It was introduced by an Italian mathematician around 1202 AD, and is believed he learned about the sequence while studying Indian mathematics that are known to have existed since before 450 BC. These numbers were discovered to be a naturally occurring pattern and exist in countless forms of mathematics. From the dimensions of the universe to the structure of a flower's petal or a seashell, architecture, and even beyond, these sequences can be found everywhere, in and out of nature. In mathematical formula, it's written as Fn plus 2 equals Fn plus 1 plus Fn. What it means is that each number in the sequence is the sum of the two numbers that precede it. So the sequence goes 0 plus 1 equals 1, 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5, 5 plus 3 equals 8, 8 plus 5 equals 13, 13 plus 8 equals 21, 21 plus 13 equals 34, and so on into infinity. When these numbers are graphed, a natural rotation occurs in the form of a spiral. So how does this apply towards trading and technical analysis? Well, when we apply a Fibonacci sequence to our trading charts, we can often recognize price has a natural reaction. For example, on a chart, we see starting prices at $5 and rose to $10 over several weeks in a rising trend. We start drawing our fib at the top 10, price of $10, current price, which is 1 on the fib, and retraces the price with the fib downward and backward in time to $5 and stop. This would be 0 on the fib. Now if we retrace the sequence as price rose from 0 to 1, the fib shows us that the first level is 0.236, then 0.382, then 0.5, then 0.618, then 786, then 1. As price rose from 5 to 10, price can naturally find resistance at each level of the fib retracement. Since this is past information, if price finds resistance and supply at $10 and falls to find support levels of equilibrium, we can expect for price to naturally find support at each level of the fib that was resistant in the previous upward trend. Essentially, we're testing the price at each level for support and demand. The moving average convergence divergence, also known as the MACID, is another technical tool that can help provide additional confluences. Instead of having to calculate the difference between two different time periods of your EMA lines, the MACID will show you that average. The MACID is typically set up by subtracting the 26-day EMA from the 12-day EMA, giving you a 9-day average called a signal line. On the chart, the indicator tool shows you 3 lines, one for the 26-day, one for the 12-day, and with the 9-day average of the two in the middle called the signal line. If the 12-day rises above the 9-day signal line, it is informing the trader that the average price is quickly rising higher over the past 9 days out of the 12. If the 26-day rises above the signal line, it is telling the trader that price over the past 9 days out of the past 26 days is slowly rising. The information is reversed should the average move below the signal line, showing us the speed and the weight of the price decline. Traders may go long or short when the averages cross above or below the signal line, respectively. The MACID can add in recognizing the EMA crossovers, show us divergence in on the RSI, and significant changes in trading volume and price direction. Following are some methods that traders may utilize when applying technical analysis to a trading strategy. As you will see, when multiple technical tools are applied together, traders may find greater confluence to aid in trade predictions. It is important to know that utilizing too many technical tools may be counterintuitive and can provide false or negative information. It is necessary to learn what information each technical tool that you are using and how they relate or disagree with one another. When applying the RSI to our trading strategy, our goal is to recognize whether the RSI is oversold below 30 or overbought above 70. As you can see in this example, when this agrees with our trend line, we gain an additional confluence, providing confidence to our trade analysis. The RSI can be utilized on any time frame to conduct a similar analysis. Now let's apply the RSI along with the MACD in our trading strategy. In the following chart below, we recognize some mutual confluences within our trend lines, presenting a potential buy opportunity. These confluences include the RSI and the MACD, as well as the technical tool called the OBV indicator, located in the bottom on the white. Since the EMAs are not crossing, we do not have complete confluence price will turn upward. Therefore, we wait for price to move into the RSI's oversold territory, as well as on the MACD. Additionally, a cross of the shorter period EMA, for example the 12 crossing the 20, establishes an additional level of technical confluence. When we have several confluences suggesting our prediction may be correct, we examine the candlestick formations to enter our buy order, and we capture the best entry. Now let's apply the Fibonacci. When we use the Fibonacci, there are several different tools that measure a Fibonacci sequence in different ways. I personally use the Fibonacci retracement tool. If you are measuring a past upward trend, believing that price has reached a significant resistance and will retrace in a downward trend, you start your retracement from the current high and draw the line down to the previous support, where price found significant support before the upward trend. As price declines, look for price to find support at each level of the fib. If you're measuring a past downward trend, believing that price has reached a significant support level and will retrace in an upward trend, you start your retracement from the high and draw the line down to your expected support line and look for price to hit resistance at each level of the upward trend. In confluence, with our multiple time frame bottom and top trend lines, and the RSI, and the MACD, we can determine whether the price will continue higher or if it is a potential point of trend reversal. Let's take a look what the Fibonacci looks like with the RSI and the EMAs. When we include the EMA lines to our chart, you can see the lines also overlap with the fib ratio lines, further validating the price of support and resistance. Another confluence to note is the area of divergence that's occurring on the RSI, signaling to us that the strength of the trend is weakening as the RSI moves upward, but the actual trend in price has been downward. On this chart, we have 5 different confluences confirming that our buy trade analysis is correct. First, the Fibonacci support line. Second, the trend line support. Third, a double bottom candle. 4, divergence of the RSI. And 5, the RSI is also oversold. And as an example of a profit potential, had you taken this trade, you'd be looking at a 580 pip trade that took roughly 9 to 10 hours from beginning to end. If this was traded with a single micro lot, your profit would be around $5.80, while a mini lot would have made you $580. A standard lot would profit you $5,800. This is a rough estimate and does not include charges like the broker spread or any commission fees. But this gives you a very good idea of profit potential. Now let's take a look at a chart utilizing the RSI, the MACD, the Fibonacci, and the moving averages in a trading strategy. First, we notice that price has reached our weekly trend line drawn in brown, and our expectation is for price to begin trending downward towards the lower trend line drawn in brown in the longer term. We have drawn our Fibonacci retracement from the support to the resistance found in between our trend line of the most recent uptrend in price. Next, we have drawn our daily trend lines in white, showing on the 4-hour chart to the right. Here we can see prices pulling away from our weekly trend line, supporting our expectation. We also see the EMA lines are coming together and crossing, meaning price has reached the average of all 6 EMAs. This signifies that price is at an equilibrium. Price is beginning to consolidate and move sideways. Therefore, we believe price has reached in the distribution phase of the cycle and maximum supply. Another confirmation, price may begin to retrace lower. We also notice that the RSI is entering below 30 into the oversold area, as well as on the MACD. Since price tends to bounce between the fib retracement levels, this may be what is occurring as the price hits the 0.618 level. We'll wait until the RSI and the MACD suggest the overbought conditions on a lower time frame, looking for our candlestick formations that suggest an upper resistance, and we'll enter our short position. So here's a recap of the subjects that we've covered in this short lesson. What is technical analysis? Technical analysis is a method of utilizing technical tools to predict future price action and trend. What are the most common technical tools? The most commonly used technical tools presented are the RSI, the MACD, the Fibonacci retracement, and the exponential moving average. How can you use the technical tools, and how are they applied to a trading strategy? Used in conjunction, the technical analysis tools can provide a trader with multiple confluences that may increase the probability of their price prediction. Begin to utilize these tools and strategies in your own trading practice, and let us know if you've had any questions about this topic that we've discussed and how we can help you become a better trader. For those of you who don't have the time or would rather an account manager handle trading for you, we offer a trading robot utilizing the MT4 platform. This is for those who want to keep practicing or don't want to trade on their own, but would like to be in the market with real cash and have an opportunity to potentially earn some real money. Using your funded MT4 trade account, you can subscribe to the Forex Destiny Trade robot, which is found on our website. The cost of this service is currently $30 a month with subscription. This robot will link to your trading account and our own, and will copy every trade we make from start to finish. You will have full override control of your account, including where to set your stop losses and take profits, as well as whether to copy in a trade or not. Otherwise, the trades will copy and execute exactly how and when our own trades do. This video will refresh some key points of our training and walk you through setting up the copy trade. If you've enjoyed this short lesson and want to learn more, we suggest you enroll in our complete training course available on udemy.com. We not only cover this topic, but also many others regarding learning to trade in any market. You'll also learn the exact trading system we use every single day that has earned us thousands in profits year after year. The course will walk you through getting set up on your own trading account and applying the tools and techniques that we use. By the end of the course, you will be trading in a proven profitable system all on your own and with confidence. You'll not only learn concepts, but be applying those concepts to your own trading account as you go. You'll also be tested on the information that you're learning to help further reinforce the knowledge and ensure your success. Not to mention, but there's a 30-day money-back guarantee if you're not satisfied with our course through udemy.com. You've got nothing to lose but the time that you could be making money. Get started today. Let me help you discover your own destiny. You can use the links below to learn more about us and to help get yourself enrolled. If you're more of a learn by reading type of individual, my entire course is also available in paperback and for e-readers. In the book, you'll find a condensed version of the complete course. It's the perfect companion to have on hand while going through the full course online, or even to supplement the information that's found in our course. If you're not ready to make the investment into the full course, the book can also provide you insight into the information and strategies that are found in our course, giving you a solid foundation to begin your trading journey. Available in all your favorite bookstores or your choice of e-reader, the links to the retailers that we provide are on our website over at forexdestiny.com, and they give you more information and any additional links. Thank you so much for watching this lesson, and I hope it provided you with some valuable information to assist you in your trading career. If you have any questions, please feel free to email me at mydestinyforex@gmail.com or find more information about the services that we offer at forexdestiny.com. Also, be sure to follow us on Facebook and Instagram using the available links below, and I usually put out strategies and ideas of trades that are available that we're looking at or currently maybe getting into. So that's a great place to get started on finding trades that you may be interested in. Keep up with my calls on potential trade opportunities by following me also on tradingview.com under Forex Destiny. Thanks again for watching, and hope to see you again. Bye-bye.